Hey, good morning, everyone. It's Wednesday, January 14th, 2026. And I am super stoked to be here. We got PP, we had PPI this morning at 8:30. Just gonna take a look and see what happened. So we had core PPI this morning. Interesting that our previous, because I guess we missed a few, maybe due to the government. Anyway, the previous was 0.4%, and actual today is 0.3. So core PPI is a little bit lower. PPI month over month, a lot lower, 0.1. And then core retail sales anticipated at or forecasted at zero point 0.4 and came in at 0.5. So retail sales a little bit higher. That's not really surprising. That's month over month because Christmas will probably see a bit of a bump in retail sales. So I think that's actually quite reasonable. Uh, I noticed leading up to Christmas that core retail sales were very conservative. So I think overall people were just being careful about where they were putting their money. PPI month over month 0.2, which is forecasted, and then retail sales month over month 0.6. And that could have been, mm, again, it's a reflection of Christmas and perhaps maybe some sales after Christmas. Like maybe people were doing some buying. Okay, so that's where we are in the economic forecast. Tomorrow we have unemployment claims, and 2 months ago we had 208,000. Last month we had 215, or we're forecasted to have 215. So we'll see what tomorrow brings. It should be interesting. I always find these numbers interesting. Good morning, Sia. How are you today? Okay. So interesting day yesterday. Um, Interesting day. I was lucky enough I was able to take that trade early afternoon. Patience, 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 patience. You're going to hear me say it a million times. You don't have to force anything. The trades will come to you. So I'll just quickly show you what my trade was yesterday and why I took it. Let's just go to NQ here. I'm on the 2 minute. Just want to explain why I took this trade. No momento here. I want to pull my chart over so you can see the right hand side. There we go. And this side as well so you get the full picture. Okay, there we go. All right then. So yesterday morning we saw that price had come up prior to the New York Open, and this was as a result of CPI. So we had this big spike. Then we had a nice move away, nice displacement down, and then price came again and tried to expand higher, failed. All right, this is a failed high here, and then price dropped right down into this busy area here. I think that was at the point somewhere down here that we had stopped the live stream, and then I was just kind of patiently waiting for a nice trade. Greetings, beautiful people. And so when price came back up, where it came back up into is this. You can't see it on the 2 minute, you can't even see it on the 1 minute, but there would be a SIBI in here. So price came in here, rejected, and then displaced away again. So I took the trade here because on the 1 minute it was a really nice SIBI. We could tell the price was resisting. Uh, it was a little weak in price. You know, you could just see that it didn't want to go any higher. So when price came up into here, this is a mitigation block, and this is second stage distribution, in my opinion. And so when it came into this area here, I took the trade. right here. I didn't take any other trades yesterday. I just took one trade, one shot, one sniper trade. Let's just get her done. Okay, so took the trade here. Price came down, came back up into the SIBI, but just when you're watching PD arrays and you're in a trade, you just follow the PD arrays down, right? Like you're looking at this side of the curve and you're just following the PD arrays down. So this wick here was a little bit messy. So price came down and then we came back up into this SIBI, which is to be expected. I was a little nervous here, but I'm doing my best to kind of increase my skill set to be patient through the retracements. And then price came down into this area here. And this is when I exited the trade. I wanted to see, or I was anticipating seeing the trade come down into the previous day low. And in fact, one of our members here on the live stream, I think it was Levere, uh, he was discussing in the morning, he anticipated price coming down to the previous day low, which is right here, this horizontal line right here. So, so this was the low. I thought it might go a little bit lower, but I thought it might dip down, but it didn't. So anyway, I closed it at a good enough time. It was 100, I think it was 120 points, something like that. So I was pretty happy with it. One shot, one kill. We're done for the day. Keep those contract costs low and just get your trade and move on for the day. So anyway, that's where I was yesterday. And now what I want to do is I want to take a look at the key price, key levels that I've been looking at overnight here. So this is on the hourly chart. Again, this is NQ. Let's look at the 5 minutes so we can see Asia and London. So we have this. Good morning, Lynn. Good morning, Lynn Trader 55. Just going over the key levels for today. So I'm on the 5 minute chart right now. So this was yesterday, our CPI, and we had PPI this morning at 8:30. So um, price was being held in this 1 hour BISI here. And overnight we had, I'm just going to move this aside just so you can see my Asia a little better. This blue area here is Asia. You can see, I know it's really tiny, but this is my indicator that I use. So it is what it is. I know it's a little bit tiny, but here is Asia. And then we have London 1, London 2, and London 3. And what that means for me is that I use 90-minute time cycles. And I'm going to be talking about that on Sunday. I'm going to introduce you guys to time cycles if you're not using them and why I use them and the advantages. So we have 90-minute time cycles. So there's 3 time cycles altogether, London 1, 2, and 3. So price came up midway to Asia and then just dumped. And where did it dump? It dumped right back into this new day opening gap here. Okay, good morning, Heat Trader. Good to see you. Okay, so this is where we dumped back down into. Now, if we pull this, just going to pull this across here because this is a key. This is a key BISI, and I'm going to be watching this morning. Price has pulled back into this BISI about to the 50% or consequent encroachment. If price suddenly shows strength, we could move back up here into this area. But price is overall looking a little bit weak. And so if we lose this BISI, if this BISI becomes resistance, then the next levels that I'm looking at for price to move down to would be this new week opening gap down here from December the 21st, and then back down into this 4 hour blue box that I have down here. And you guys know, if you've been with me for a while, that this is the the box we've had, this level, I won't call it a box, this level we've had on the chart for 6 to 7 weeks. This is like the key level. So let me go back up to the 1 hour, just to refresh your memories. I'm just going to move, I'm just going to move this daily over for a second here. So this is the key level, right, that we keep repricing back to. So if we lose this BISI today, right here, if we lose this, I'm looking for price to move back into this 4 hour key level here. If we lose this 4 hour key level, then I'm looking at the new week opening gap, and that's from December the 14th and January the 4th. These are the two levels. Now this is down at 25,400, 25,470. So these are the key levels that we'll be looking at if we lose this hourly BISI today. The other key area that I have on my chart is when price dropped, and this was from January the 2nd, this big drop, it formed this large SIBI. This is another key area that I'll be watching. Now I've just moved this over because I don't like having a lot of stuff on my chart, but I'm just mindful of it. So that is basically what I'm looking at. I also noticed that we could potentially have a breaker block. So we have a high, low, higher high, lower low. So we could see price move up and then dump. But I'll just put another one of these on the chart. So this is on the hourly. So high, low, higher high, lower low. So that's basically the levels that I'm watching today. And of course, all the other key levels. So let's just go down to the 15-minute for a second. I'm going to just take the new day and new week opening gaps off for just a second, just to make the chart just a little bit clearer here. This was the trade I took yesterday. It was just a nice, clean, easy 100-pointer. So here's our Asia, here's our London, and then here's our 90-minute AM cycle so far. And we have a an SMT on the daily below us. It doesn't mean that anything's going to happen with this right this second, but it's just nice to take notice of it. Here's our 4 hour. And as I say, if price regains strength, then I would expect it to move up, back up through this BISI, and then use this as support. But right now, we are below it. We went below it overnight, and we're using it as resistance at this point. In terms of our 4 hour candles, we can see here that we've been dropping overnight, starting at, well, the 6 p.m. candle was a doji, so it was a little bit indecisive. And then our 1800, our 2200, 2 o'clock. And then our 6 a.m. candle, we have a wick to the top and a wick to the bottom, so that indicates to me that price it's indecisive right now, this 4 hour. So this is where it opened, this black line here, price opened here, it went up, enclosed or accessed some of this liquidity, dropped down to this level here, and has moved back up. So this is where price is right now, but this is opening price here. So I'll be more than likely waiting for that 10 o'clock candle to open up this morning, just because that 10 o'clock candle is so beautiful. We've had PPI, we've had retail sales, so I want to give the market the opportunity to find its footing before I start looking for something. Previous day high, previous month high above us. Here's our midnight. London high right here. Asia high right here. So we could see price come up. If it wants to drop lower, it's going to come up first, or likely to. So we've got Asia high up here, London low, London high here, and then London low down here, which we've already swept in the AM session. This blue box here is my 90-minute AM session. Each session has 3 boxes. So that's where we are. As I say, that's what I am looking for or looking at right now. I'm just going to move to the 5-minute. In terms of indices this morning, again, if we look at the last 4 candles on the hourly, we have accumulation. I also want to show you on the 4-hour. Let's jump to the 4-hour for a second, just to put some of this price action in perspective here. If we put a box around from here to here, I'm just going to make this a different color. This is accumulation. We have been in accumulation. So let's just change this to orange. From about January 5th to today, we have been operating in this. It's a fairly tight area. We haven't had some really, really big runs. I mean, when you move down to the 1-minute, 2-minute, they look like big runs, you know, like 100 points is a nice run when you're a day trader for sure. But we have been in this kind of choppiness. Now let me put a different spin on this. Let's go to the weekly. Just to hit home this point. If we look at the weekly, and make this a different color. Let's go with pink. No, let's go with blue. These are our weekly candles. So 1, 2, 3, 4. We had a little bit of a dip here. 5, 6. The last 6 weeks, look at this range we've been in. We've really been in a fairly tight range. We haven't moved above to attack all-time highs, and we haven't moved down here to the low 2400s. We have all of this liquidity, over here. So there's a lot of liquidity down here. So anyway, I just wanted to point that out, that when you look at the higher time frames, we've really been in a pretty tight range for the last 6 weeks. Not surprising given, you know, it's Christmas and holidays, and people are just back to trading this week actually. So anyway, back to the 5-minute. I'll pull up ES over here, and I'm going to just take off the week opening gap over here because I don't want to have my chart all cluttered. And when I go to my hourly chart, I have the new week opening gaps, previous week low down here. So I'm just going to keep an eye on the hourly chart as the morning progresses, and see if we get past this new day opening gap down here at 25,690. Okay, so that's it. That's Wednesday. I was up so early this morning. My dog didn't want to go out for a walk with me this morning. That's how early. He looked at me. He was like, "No, it's not even, it's still dark out. Give me a break, Mom." Anyway, I went for a really long walk by myself. I grabbed a coffee, and then I came back for my dog. And he was a bit confused why I had gone without him. But anyway, I came back for my dog and then went out for another really long walk. So I've been out walking in this beautiful, cool, fresh air for about, I don't know, almost 2 hours. So I feel very clear-headed. How's that good, guys? Okay. This looks like we have the girl power hour on this morning. Sorry, Sia. Again, we've got unemployment tomorrow, and then Friday we have no news. So we'll be just relying on the 9:30 open for volatility on Friday. This channel is for entertainment purposes only. I am an ICT trading student. I don't encourage anyone to trade. People can lose money from trading, so this is not a channel that encourages anyone to trade. The way that I trade is for my personal reasons, and I encourage that you do not copy my trades because you cannot be a good sim trader by copying someone else's trades. I encourage you to develop a system, a program whereby in your sim you can practice taking trades if that's your interest. I'm going to move down to the 1 minute because I like to see that first presented fair value gap. So again, we've got this doji 4-hour candle here. And on the 4-hour time frame, I'm just noticing, we have this area here of liquidity just between this candle 1 and candle 3 at this time. So again, just something that I notice. So you can see my boxes here. You can see they're labeled. So these are 90-minute boxes, right? So AM, I have 3 boxes. This is AM1, this is AM2, and then the next one will be AM3. And then we move into the PM session. And I use these boxes or time frames, if you will, these 90-minute cycles uh, during the London AM session. Hey, good morning, world. World, I'm just reading your question here. Can you explain to the group the 9:30 a.m. first presented fair value gap? Are we waiting for 9:30 to create a gap, or do we look left or right to see oil price action for the gap? The 9:30 first presented fair value gap is one of ICT's signature PD arrays. It's a PD array. And so the first presented fair value gap is on the 1 minute, and it is after the 9:30 candle. It does not include the 9:30 candle. It's the candle after 9:30. It's the first one. And ICT says you should keep the first presented fair value gap on your chart, even for a lot of the week. You can just pull them across. Mine appear and disappear because I have the indicator. And that first presented fair value gap is used as a PD array. You can use it as a standalone strategy by just trading off of the high or the low of it once you determine trend or institutional order flow. So I've noticed that that first presented fair value gap works really, really well. So maybe if you're a scalper or you just want to get in, at between 9:30 and 10, get your trade and get out. That's basically that's my understanding, world, of the first presented fair value gap. And for sure, anyone else chime in if you have anything to add to that. Uh, but it's a key level according to ICT, and certainly the first presented fair value gap on Mondays, ICT encourages everyone to keep that level on your chart for the week. So if you've got this indicator, world, you'll notice like it disappears, right? So you would just have to draw it in over top and keep it on your chart for the week. I like the first presented fair value gap. I just think it just, especially when the market seems a bit confusing, or I'm not exactly sure institutional order flow, it seems to be like a fairly good barometer that you could use. Oh, thanks, world. Thank you. You're so good. You're such a people person. So I haven't opened quite yet. I just want to. So AM1, this AM1 time cycle here has taken out London low and has also taken out London low on ES. We've taken out previous day low on both ES and NQ. London had this nice drop, worked up a little bit, right back to that, retested that previous day low on NQ and rejected from there again. And now we're just kind of chopping in and around here. Hey, just USA 3105. Good to see you this morning. So we rejected off that previous day low. So I just put this in here. See how it rejected? It came back up, it retested and rejected. So if price is going to go lower, I like to see it. I'd like to see it manipulate first higher. I'd like to see it either take out maybe London high, possibly Asia high. At this point, it feels pretty weak. So here's our Asia high up here. So if price is going to move down, I'd like to see it grab some liquidity, purge some liquidity up here before moving down. So let's see what happens. It's 9:30. I'll go back to the 1 minute, although I way prefer to watch on the 5 minute. So here we've got our AM, our second cycle of AM that took out the high of the first cycle. And again, we've got London up here. We have broken below this 1 hour green BISI, and therefore we're going to be watching today if this level acts as a ceiling or as resistance in its support of price moving lower. So when it comes to all these SMTs here, sometimes it can look a little bit confusing, but in the order of a smart money reversal, a change in the state of delivery has to happen first. So first is a change in the state of delivery, followed by an SMT. So 6 a.m. price, it opened here, it rebalanced price up into this disbursement area here. And now we are moving down. Here's first presented fair value gap on both ES and NQ. This is YM over here on my right and ES on my left and NQ in the middle. So got a little bit of chop here on YM. See if it wants to take the previous day low, Asia low, and then of course London high above that. Here's the Asia high up here, Asia low is here. So here's the SMT between YM and ES and NQ. We have a change in the state of delivery here. Again, I'm not doing anything until like it's only 9:35, so I'm going to see if it wants to purge or sweep a main level. We have a fair value gap. We have an inverted fair value gap, change in the state of delivery, but this is weak. We do have this SMT below here. Low, excuse me, high, low, high. These are all, I'm just talking out loud so that you know what's running through my mind. Right back into first presented fair value gap, possibly continuing higher. So we swept second cycle high. We've swept, or sorry, um, we have swept the low of AM1. With a fair value gap, inverted fair value gap, high, low, high. I like to see a major level swept, like major level being London high, Asia high, previous day high, and all of those correlated to lows. I want to see a major level. Again, I'm just thinking out loud. We do have an SMT. We do have an inverted fair value gap, but if I look above, I would want to find the next inverted fair value gap, to think like how strong would a move be? It could move up and sweep this high, or maybe, London day high. Potentially, it could potentially back into this fair value gap, retesting it, using it perhaps as support. So I do like this, but only from the perspective that it swept AM1. We're seeing the first presented fair value gap just being tested. Let's just put those new day opening gaps back on. New day opening gap from January the 8th. So this is an SMT with YM. I prefer an SMT between NQ and ES. A lot of choppiness. If we look at ES, we see a lot of wicks up and down, up and down, up and down. This 6 a.m. candle is below opening price. So that's quite bearish. Taken this low. That give us an SMT. This, you see on ES did not take the low. You see this SMT right here? Did not take the low. NQ took this low. Again, for the model that I used, we need to have a change in the state of delivery first. Change in the state of delivery here. Inverted fair value gap and fair value gap. So price could be wanting to go lower. I would want to see, this is the inverted fair value gap here. This is the fair value gap here. Low, high, low. We'd want to see it come back in before dropping lower. That's what I would be looking for, right? We have low, high, low, and then we want to see it come back in and then dropping lower. And that's what I would be looking for, but it's still early, guys. It's only 9:43. So let's just put on the breaker here. So we have a high, low, higher high, lower low. There's our breaker, and our breaker goes between the first high and low. So here's the high and low, so the breaker would come in here. Sorry, there's a lot on the chart right now. This would be the bearish breaker. Right, and I would want to see price come back into this area before moving lower. That's what I would want to see. Now that SMT has disappeared because we can see that ES took this low, just like NQ has taken out this low. Again, I'm just talking out loud here, guys, so that you can kind of follow maybe what's in my mind. So we've hit this blue area, this key level, right, that we've had on our chart for 6 weeks now. The 30-minute SMT up here. Again, it's YM. So here's our inverted fair value gap. Fair value gap. Breaker block. Change in the state of delivery. for the key level that price has just tapped into. So we have to see what the reaction is on this key level. So if we go back to the hourly, there's our key level. See? We've taken out this low. There's an SMT there. Daily SMT. We've taken out this low, and we're in a key level, which also happens to have a new week opening gap. We have 3 bearish 4-hour candles, and we have rejected from this hourly BISI. So you can see how many times we've tapped into this level so many times. So it's critical to watch and see what is happening at this level. Will it hold? Will it not hold? We've got a breaker. We've got a nice little format here. It's 9:47. Back into this SIBI. We're rejecting. Got this SMT up here. Change the state of delivery. I just think to myself, I don't need to be the first one in the trade. I want to confirm in my mind institutional order flow and have evidence of it. This key area here, because it's such an important area, cautions me to take my time. Now, if we break below the consequent encroachment of this area, that gives me a little more evidence that price is bearish. I don't want to rush into anything. I want to wait, and I want to confirm institutional order flow, like without a doubt. Because if the move is going to be good, the move could be 200-300 points. You don't need to be the first one to the ball game. And I'm looking forward to that 10 a.m. candle, 4-hour candle opening. If we lose this blue level, sorry to keep calling it that, but for lack of a better word, see, we're holding on here. We've got this SMT here. If we're holding on to this blue level, we could see a reversal. If we lose this blue level, we are looking at previous week low, new week opening gaps, and this red level down here is on my it's a weekly swing low, so it's a significant level. We could be looking at going down here to 25,267. If this is the manipulation up here, we're having a nice move down back into this SIBI and perhaps a continuation lower. We have an SMT. You have an SMT here, so NQ has taken out this low and ES has not. See that? See, ES has not taken out that low. The SMT means that there is a divergence or a separation between where ES is going and where NQ is going. And well, we don't know yet if price is going to reverse or if it's we don't know yet. We're just waiting for confirmation of institutional order flow. A smart money reversal is a change in the state of, is a purge, change in the state of delivery, SMT, inverted fair value gap, and fair value gap. So the question is this manipulation here for a move lower? And I don't know the answer to that. So I'm just, if I don't know, then I'm just going to wait. Here's a change in the state of delivery to the downside. Here's a breaker. But again, this is a key level here. If we lose this key level, then it's likely that we'll move down. Um, the trader with the great dog. Sorry, I can't say your name there. 1951. When this morning session is over, I'm going to add to the description of this video a very good video on SMT. And then if you watch that video, and it's by JEM, that video really helped me to like understand the role of SMT. So I'm going to put that in the description. They're pretty short videos. I don't think his video is more than like, I don't know, 20 minutes, but I think it's going to help to solidify in your mind the role of of SMT. It's a video that really helped me. It's Andre. Andre. Okay. Sorry. And for anybody else who just needs some like reinforcement of the core concepts of SMT. It's honestly it's taken me a while to get it in my head what I'm looking for and what the significance is. For me, I think it's just been like the last piece, but this was a really good video. And as I say, I'm going to post it for you. So again, we've got an SMT here. This low did not take out ES. NQ did take out this low, so that's an SMT. By itself, it doesn't mean squat, okay? In a smart money reversal, we need to have change in the state of delivery first, which we have, but we also have this big SMT up here, which is 30 minutes, which is great. So the higher time frame SMTs mean they hold more weight. I think we're probably going to go down, but I really do. I'm waiting for this 10 a.m. candle to open, and I'd like to see maybe a little bit of a pullback into the bearish breaker before I enter. But anyway, let's see how it goes. Another win for the inverted fair value gap. Like every day I look at it, it seems to be such a good barometer of where price is going, eh? So like it rejected, right? First presented fair value gap, it rejected here. That could have been a short for someone who's just wants to trade in the first half hour kind of thing, right? You're very sweet, Donna Test. Honestly, for me, it's just probabilities. It's okay. As long as my risk management is top of the game, like I only risk X amount per trade, and it's only 2 trades per day. So there we go. Oh, I want to wait for this 10 a.m. So it's opened, it's come lower. So it's probably, anyway, I don't want to say everyone has to make their own decisions here, but I think if we drop this, we could be looking at a short here. Here's our opening price. I want to buy in discount, so I'd like, I'd like some discount here. I want a sale. So this could have been the manipulation up here with this SMT. Come back into this change in the state of delivery, tap back into here, and then drop. So It's a rejection. I kind of like short, but don't copy my trades, guys. Like you got to do you, right? I would like to get more value. I think I'll be patient. I'll see if it comes back up here. Thank you, Just USA. Good point. Let's see if we can get slightly better price up here. Here we are. We've got this below us. We've got this below us. We have taken this out. We could have purged the low here. So we could still see a reversal and go up. So I want to be super, super careful. This is a daily SMT right here. Let's see if that was the purge, possibly. So we either come back here for a discounted area or we look for potential reversal here. Again, there's opening price of the 4 hour. It's come below, it's swept down here. It's giving us a rejection wick of this blue significant area. But again, it could be a sweep down here. It could be a purge. Rejecting off its opening price. Here's the 4-hour opening price. Rejecting off that price. I think I'm gonna try a short. I still can't make up my mind here. I'm gonna wait. I'm gonna see if I can either get a better price up here for a short, or wait and see if this wick is the manipulation that turns into a drive higher. Even if this is a genuine short opportunity, price could come back to the change in the state of delivery and retest it. So this whole area here is risk, right? Because this is where the change in the state of delivery occurred. Price could come back up here. Let's see if an hourly civvy forms through Monday swing low. Here is Monday swing low, and your XMT, you are discussing this potential civvy, right? Yeah, for me, it's we've got this SMT, we've got this key level that we haven't been below since January the 5th. And so I just see this level here is it's either going to hold and push up, but let's see if the push up is weak or if we're going to drop below and we're going to go down to here. If we just go to the 4 hour for a second, this is what we have below us, right? We've got this hourly. This is a key level right here because of this low from January the 2nd. This is a key low. This is the red line that's on my chart. Now we've got some daily SMTs here on the higher time frame. So let's just go back to our 1 minute. Let's retest these areas. Now it's 10:12. We're nearing the end of the macro, but we're still not 100% clear on institutional order flow. So it's okay to just sit on your hands. We tap back into this SIBI and reject it. This is a doji 4 hour, but this is a good rejection sign up here. If this is the low, change in the state of delivery would be right here. But I want to see if we come back into this bearish breaker and reject. Everything looking bullish in the three indices. So it's 10:15. The macro is ending, but let's see if we get a rejection from the bearish breaker here. First presented fair value gap and retesting the change in the state of delivery one more time. We have this imbalance area here on the 4 hour candle. And so price may want to close in this imbalance before dropping lower. I'm going to take this rejection, and it's going to be a small stop loss. looks pretty bullish. It's going to go past the change in the state of delivery. It'll take me out. Yeah. So I'm going to wait till the next macro. It'll just take me out by like a couple ticks there. I still like this. I think I should have waited for the next macro to begin. So I'm hesitant here. Yeah, stopped out twice. I think I should have waited for the next macro so the price could be very definitive. I think this is a tricky area because this blue level is like a key level, but we are rejecting off this. Anyway, I'm gonna wait for the next macro. That's my two. Normally I just take it's two trades for the day and I'm out, but I'm gonna reassess on the macro. Yeah. Damn it, it drives me crazy when I'm just a little bit too early in. Big daily SMT here. Took out these lows. Big daily SMT. Okay, let's wait and see for the 1040, 1045. We'll see if this area can hold. I'm going to be patient. I have my stop loss too close. I should have had it maybe at least in the top half of the first presented fair value gap. But I'm still not entirely certain on the institutional order flow. We could still go up. Back to opening price here on the 4 hour. And if this is manipulation down here, then this is the fair value gap. I think price just needs some time to work out which way it wants to go. Okay, bye. Okay. No, I'm not in a trade. I'm in a patient trade. That's what I'm in. I was taken out of my short twice. I honestly, I just, my stop loss was too tight. Okay, bye. Okay. Yeah, I think because this blue level here, it's a key area. It's been a key area for almost 2 months now. And I think we just need to be patient and let the market decide whether that key level is going to be support for current price or whether it's going to lose that level. I am leaning bearish, I gotta say, but I'm gonna wait for that macro. My dog is lying under my desk. He's come over for some emotional support. Yeah, we have a nice 30-minute SMT down here below this area, a retracement back up into the breaker. So I'm leaning towards bearish. It could be that we just let the morning play out after all this news and then, come back in the afternoon and take a look and see if the market has figured out what direction it wants to take. I think we either get below this blue level or we get above it. We need some confirmation. is rejecting the SIBIs and or the SIBIs and respecting the BISIs. Back to opening price of the 4-hour candle. Oh goodness, this thing today. Guys, the macro is ending now, and that means that price is probably going to bash around for a while. Um, I think so long as my threshold, I think for this trade will be, I don't want to see it come past this swing high, but it could literally do nothing for the next half an hour or so. This could be in this new week opening gap. This could be the tail end of the trade. But if we look on the hourly, get all this stuff out here. I think this is the draw somewhere down here, although, price could stop right where it is and reverse. But I kind of like this 25,267 down here. I kind of like it. Do I expect price to jump down there now? No, the macro's over. So I think what I'm going to do is I'm going to have some patience here. I'm going to practice patience. It's something I've been practicing for years. And I think I'm going to just let price do what it's going to do. But if we get to the consequent encroachment of this SIBI, I'm going to end the trade. I'll terminate the trade. Notice that once price is running nicely, I don't stay on the 1 minute. And the reason I don't do that is because price is moving so up and down, up and down, up and down. It drives you crazy. So as soon as the trade is underway and I have an idea in mind of where I think price might be headed to, I move to the higher time frames, like at least 5 minutes, sometimes 15 minutes if it's a good run. Yeah, macro starts again at 0:45. However, having said that, Andre, having said that, once 11:30 hits, we kind of get moving into that no man's land of lunch. So again, you have to weigh how firm am I on my terminus for this trade? How big a draw on liquidity do I think it is? And is it going to have the gas to get there? I guess. Now, if we look at yesterday, what happened yesterday is during the normal trading day, price did not get down to previous day low. And I believe it was Levier who said, I think price is going to go to previous day low. Well, it didn't get there during the day. It got there after hours, right? So price is not always going to get to our predetermined terminus within the time frame that we would want it to. Like I've just showed you where my draw on liquidity is, right? Whoops, hang on 1 second here. This is my draw on liquidity down here at 25,267, but I don't know, like what the time frame from that is going to be. It may not get past here during today's session, like before 4 o'clock, and then it may bang out here overnight. But what I do know is now that we're in the macro or we're out of the macro, we could natter around here. We could bang around here for a while. So the question then becomes for the trader is, do I want the mental mm, activity to stay in this trade, or we just call it a day, not a bad run, call it a day, and then get on with your day? So I think that's the question you need to ask yourself, because it takes mental acuity out of you to sit in this trade for like another hour thinking that it might go down more or it might not. Anyway, that's my 2 cents worth for what it's worth. So I am prepared to terminate this trade at 50% of the consequent encroachment. So if it gets to the wick of this candle, I'm going to terminate the trade and call it a day. Price could rebalance right up to this wick, right? Like this is the whole enchilada. Over top of that, we're looking at here, right? I'm not staying in the trade. I'm not taking a loss up to here, but so long as we stay below this swing high here, I'll stay in the trade and wait till the next macro, see what happens. It might stay around here the rest of the day, you know? I don't know. I think this candle just heard me talking. Yeah, I'm gonna give it like a few more seconds here. I mean, to be fair, this whole it could back up into this whole sibby. If we were in a macro, I wouldn't want to see it like hit the consequent encroachment, right? But we're not in a macro, so that's it. That's what a runner's for. Okay, so that's the morning session, and we'll see later this afternoon. Um, we'll see later this afternoon what the market wants to do, but from my perspective, I'm done for the day, but I'll take a look at it around 2 o'clock and just see if just kind of check in and see what's happening. But yeah, so those are just my few tips is once you're in the trade and it's running nicely, get out of the 1 minute because the 1 minute will just have your heart like in your throat the entire time. So move to the 5 minute, the 15 minute, and remember that you have to allow price to rebalance back into these sibbies. Like price doesn't just fall straight down, right? Like even to here, price rebalanced all the way back up to here, then dropped, rebalance, back up to here. So anyway, interesting. We broke below this key level here, this blue horizontal level that we've been talking about for weeks and weeks and weeks. Here is the 10 a.m. candle. This again is the opening price here, such an important area. And that's where we're at. That's kind of the morning. So anyway, I thank you guys for joining me along for the ride, and I hope you guys have an awesome rest of the day. And I will be back again news tomorrow. Um, unemployment, yeah, unemployment. So that's it. Oh, hey, Lavere, you were right yesterday. Price did go finally to previous day low, but it was in London. Manipulation at 9:30. No, I know I saw that, but it tricked me this morning. Sometimes manipulation is clear as mud right here. Let me just see. 9:34. Yeah, right here. Let's just put a big honkin' M right there. There you go. Manipulation. Sometimes the manipulation is so clear. Like it takes out Asia low or London low. But in this particular case here, manipulation, actually, you could really think about manipulation at 8:30 because here is we took out the AM and the London third 90-minute cycle, came down, then came back up for one more retest. But in actual fact, here's your mitigation block as well, right? But when the price is running and you're in the moment, like you're not always going to see it. It's always easier to see after the fact. So put M's on your chart if that's what you need to do. So you start getting familiar with figuring out where manipulation is and what it looks like. This, Levere is right. This was manipulation. And then I should have given my short trades room to breathe here. That was my fault. I had my stops too close. So that was an error on my part. I'm going to put that in my journal today. And then this return to the um, change in the state of delivery, man, that would have been a big pullback if we had entered the trade like up here or something. But for whatever reason this week, like the pullbacks have been pretty substantial. This is probably a pullback. I anticipate price is going to go lower this afternoon. This is probably just a pullback. But again, you don't know, right? So might as well just take your money, take your money and run. And then if the trade looks like it's a continuation or smart money reversal, you can always re-enter during a macro. But those macros are absolute gold in terms of if price needs to get somewhere, it's gonna um, it's gonna utilize the macro because time and price have to meet. And when time and price meets, it's a beautiful thing. So, Levere, I took the trade from I don't know, somewhere up here and took it down. I don't know, it ran pretty good. It was a good run. It was a good run. So, okay then, guys, have an awesome day and another day in the books in terms of experience and tape reading and figuring out what manipulation looks like and how SMTs respond on a daily basis. And I'm going to add that video into the description of this video on SMTs so you can just kind of read up about it. Yeah, the key of trading is only liquidity and patience, Levere. Yeah, liquidity moves the market. It's like a game of Jenga, right? It's going to it needs to load up on gas before it can go to the next destination. So, okay, guys, awesome. Thanks for joining me, and I'll see you tomorrow morning. Bye for now.